Most Canadians think the worst is already behind them, but that may not be the case. Yes, the mortgage went up, people cut the vacations off, people pushed off the renos, and even picked up extra shifts. But everyone held on. Canadians got through it. And right now, most of them thought that was brutal, but I made it. Here's the problem. A second wave is hitting right now, and it's landing on the exact people who thought they were through the worst of it. If your mortgage is renewing in the next 12 months, this video is specifically for you. I'm Raghav Manchanda from 7 Lending, and today I'm going to talk about this one problem that every homeowner in Canada is facing right now. Let me set the scene. The Bank of Canada raised rates faster than almost any time in history, hike after hike after hike. Record low pandemic rates to some of the highest in decades. About 1.5 million Canadians had to renew right through the middle of it. The predictions were brutal. Foreclosures, defaults, a housing crash. And thankfully, that mostly did not happen. Not because it wasn't painful. It absolutely was. Canadians suffered. Payments jumped by hundreds of dollars a month. Trips got cancelled. Renovations got shelved. People picked up extra work. But the market absorbed it. Banks stretched amortization periods to lower monthly payments. And human nature kicked in. Nobody hands back the keys of their house unless they have absolutely no other option. So the market somewhat survived. People took a breath. But here's what nobody tells you about the second wave. It does not look like the first one. In 2026, another million mortgage renewals are hitting. On paper, sounds similar. In reality, the conditions are completely different. 3 things got people through round 1. They're mostly gone now. First, savings. People renewing today aren't the same people who renewed 2 years ago. These homeowners have spent 3 years or just about that absorbing high grocery bills, insurance, gas, everything getting higher. Whatever financial cushion they had going in round 1, most of it has been used up. There's very little left to absorb another hit. Second, rental income. If you own a detached home in Surrey, Langley, Tsawwassen, Toronto, anywhere in Canada, a lot of you are counting on the basement suite to carry part of that mortgage. You need to hear this clearly because rents have softened. Vacancy rates have improved, which sounds like good news until you're the one collecting the rent. Tenants have more options than they've ever had in years. And some are literally moving across town to save $300, $400, or $500 a month. The rental income you built your budget around 2 years ago is not the number you're working with today. Number 3, the economy. Job numbers are weak. GDP growth has slowed. There's real uncertainty around tariffs and what's going to happen with our neighbors down south. When your income is stable, you find a way to absorb a higher payment. When there's doubt about that income, it changes the entire calculation. Round 1, people survived on grit, savings, and luck. Round 2, most of those safety nets aren't there in the same way. Now let me put real numbers on this. This is an actual scenario I run for clients. Let's say you bought a home in Vancouver for $650,000 in 2021. You put the 10% down, and including your mortgage premium insurance, your loan was about $600,000. You got a really good rate, 1.7%, which sounds like a fantasy now, but that's what people were getting back around the pandemic. Your monthly payments are going to be about $24.68 a month. 5 years later, you're renewing. Your balance is just over $500,000. At today's rate, your new payment on that balance lands around $3,100 a month. That's roughly $640 more every single month. Over the year, that's $7,700 out of your household. Money that used to be yours. That's not a budget adjustment. That's a car payment. That's kids' activities for the year. That's a family vacation twice. That's a major life expense. And here's the twist, everyone who's been waiting and hoping rates would drop before the renewal, they went the other way. Fixed rates actually moved up about 0.4% in recent months. Bond yields rose on inflation, oil, global uncertainty, and that 0.4% sounds tiny, but that's roughly $33 a month extra for every $100,000 you owe. On a $500,000 balance, that's $167 a month. Now, let me tell you something the banks are not going to put in the letter they mail you. The renewal offer they send you is not the best rate. It's a starting point. Banks count on the fact that most homeowners are busy, stressed, and they will just sign and move on. And statistically, most homeowners do. Here's what most people don't realize they have access to. A mortgage broker can shop your renewal across dozens of lenders. And if after all of that, your current bank actually does have the best product for your situation, a good broker will always tell you exactly that. You'll renew with your bank knowing it was the right move, not just the default one. Second thing, and this one matters if your cash flow is tight, rate isn't the only tool on table. In some cases, depending on your mortgage type and situation, you can actually re-amortize your loan at renewal. Stretch the remaining loan over a longer period to bring the monthly payment down. Yes, it costs more in interest over the life of the mortgage, but for the households where cash flow is tight month over month, this can make a difference and get them some relief. Most homeowners don't even know this option exists until someone shows them. And for investors with multiple properties, each one needs to be looked at on its own. Some still make sense to hold, some might not be worth carrying anymore. That's a conversation to have before your renewal date, not after. The point isn't that you have to use me. The point is that you have more options than your bank's letter suggests, and you deserve to see all of them before you sign anything. Let me be specific about who should be paying close attention right now. If you bought a condo in 2020, 2021, or 22, your renewal is coming up and your payments are going up. You already know that. If your condo's value has dropped, which it has across most of Metro Vancouver, you may be renewing against a lower valued property. That affects what products are available to you. If you're a detached homeowner counting on suite income, run your numbers with that suite would actually rent for today. Not 2 years ago, not 5 years ago, not what the last tenant paid. What comparable units in your area are listed for right now? And if there's any income uncertainty in your household, commission, contract, fluctuating work, anything connected to tariffs or sector slowdowns, please don't leave this until the week before your renewal date. I work through mortgage files every week. The people in the hardest spots right now aren't people who made bad financial decisions. They are people who made completely reasonable decisions in 2021 and the world changed around them. The earlier you start the conversation, the more tools you have. The later you wait, the fewer. Here's the part that barely makes it into news coverage. The real damage from this renewal wave isn't going to look like foreclosures necessarily. It won't be as dramatic. It won't be one headline that marks the moment it happened. It's a slow grind and it's already underway. Every extra dollar going into a mortgage payment is a dollar not going to a restaurant, a contractor, a local business, and those businesses feel it and cut ours. Those people spend less and it compounds quietly. Right now, two completely different stories are being told at the same time. The market says things are stabilizing. The homeowners renewing their mortgages are saying, my payment went up, my rental income softened, and my account is thinner than it has been in years. You know which story I hear every single week? I'm not making this video to scare you. You're probably already carrying some of this on your own. What I want is to give you something useful to do with it. If your renewal is within the next 6 or 12 months, start the conversation now. The earlier you start, the more runway you have. Rate holds, different lenders, different products, options your bank won't put in the letter it mails you. Know what your property is actually worth today. Not the BC assessment number, not what your realtor told you last year, because it tells you what you can access. If you have a suite, run a conservative rental estimate. If it's sat empty for 2 months, do your numbers still make sense? And if you want to sit down and run through your actual numbers, your renewal date, your balance, your property, your income, what your real options look like, and yes, what rates are actually available to you right now, that's exactly what I do. My link is below. Book a call. It's free. It takes 15 to 20 minutes max, and it's a lot less stressful than figuring this out on your own 1 week before your renewal. If this video was useful, make sure you subscribe. I put these on every week because I think people in Canada and especially in BC deserve a straight picture of what's actually happening, not just the convenient version. This is Raghav from 7 Lending signing off, and see you on the next one.